If you think that building business credit is just like building personal credit, you're in for a surprise. By the end of this video, you'll understand how business credit actually works, why and how it's different from personal credit, and specific steps you can take to start building business credit now. I'm Gerri Detweiler, education consultant for NAV, and NAV believes every small business owner deserves the chance to succeed. NAV has helped over 2.5 million business owners access their business credit data. Checking your business credit data for the first time can be a different experience than checking your personal credit, so you want to be prepared for that. I'm going to share some key differences and similarities and help you understand how to check your own business credit. So let's go over the fundamental differences. First of all, your personal credit is typically tied to your Social Security number, and it contains information about how you've paid consumer bills like your car loan, mortgage, student loans, or credit cards. With personal credit, if you get one of those loans, typically it will be reported to all three major credit bureaus. It's very unusual for one credit bureau to have a very different credit file than another. And part of that is because consumer credit is heavily regulated. There's a federal law, the Fair Credit Reporting Act, and it gives you the right to see a free annual credit report. It gives you disclosure of your credit scores in certain circumstances. It dictates how long negative information can stay on your report, and it even covers disputes when you find a mistake on your personal credit. Business credit is tied to your business, and sometimes that means it's tied to your EIN, or Employer Identification Number, but not always, because each of the major business credit bureaus will have its own identifier for identifying your business within their system. For example, Dun & Bradstreet uses something called the DUNS number. Experian has its own business identification number, or BIN, and Equifax has something called the Equifax ID. Business credit is designed to evaluate the creditworthiness or the risk of doing business with your business as opposed to you as a consumer. There's no law that's similar to the Fair Credit Reporting Act for business credit. A lot of the procedures and processes will be different than what you're used to. So an example is when you're turned down for a consumer credit card, you get a notice that tells you what credit bureau they checked your credit file with, what your credit score was, and how you can get a free copy. When you're turned down for business financing, they may not have to tell you that they checked your business credit, and they won't give you a free business credit score. So let's talk about the credit scores, because when people think of credit reports, they often think of the score, the number that indicates whether their credit is good or not. With consumer credit, most credit scores are created by two companies, FICO and VantageScore. And with most consumer credit scores, the range is 300 to 850. 850 is the best credit score you can get. It indicates the lowest risk. And as I mentioned before, when you see a consumer credit report, if you have an account that appears on one of your credit reports, it probably appears on all three of them. Personal credit, the major credit bureaus are Equifax, Experian, and TransUnion. With business credit, the major credit bureaus are Equifax, Experian, and Dun & Bradstreet. Now, you may have noticed that Equifax and Experian fall in both categories, but the data about your business or about you personally is always kept separate. Business credit scores are typically created by the bureaus themselves, and they have different score ranges. So, for example, Experian's IntelliScore, the older version, ranges from 0 to 100. The new version ranges from 300 to 850. Business credit payments are also tracked a little bit differently. So, for example, with your consumer credit card or your consumer mortgage, if you accidentally pay a couple days late, you will probably end up with a late fee and you might pay more interest, but it probably won't show up as late on your consumer credit report until you're 30 days late. Usually they don't report except in 30-day buckets. With business credit, they use something called days beyond terms. So if you have an arrangement with one of your vendors where you have net 30 terms, so your payment is due in 30 days, and you pay on day 35, you'll be 5 days late, or 5 DBT. And that payment could appear on your business credit. So it's a little more granular than consumer credit. And what that also means for you is if you're trying to build business credit, paying on time is really important, especially when you don't have a lot of credit references or a well-established credit history. Another thing that's a key difference is when you check your business credit, you'll notice that it probably doesn't list the names of creditors. So instead of saying, for example, that you have a credit card with Chase or Wells Fargo or Bank of America, it will just say bank card. So you sometimes have to be a little bit of a detective to identify which of your creditors are reporting to that credit bureau. And then finally, a key difference, and this is one that throws people off all the time, is that a lot of financing in business credit reports to one or two credit bureaus, but not all three. Some lenders report just to something called the Small Business Financial Exchange, or SBFE. And the SBFE is like a data warehouse. It doesn't create credit reports. It doesn't create credit scores. It just works with the major credit bureaus. So it collects information from lenders and then that to the credit bureaus, who can then sell reports that include your business credit data from the SBFE. I know this may sound a little confusing, but the reason I'm emphasizing it is because you may check your credit and think, well, I have a credit card or I have a business loan and it's not showing up on my credit report. It could be in the database with the SBFE, and it could show up if a member lender requests a credit report with that information. One of the things to keep in mind is that even if you are working hard on building business credit, you don't want to overlook your personal credit, because there are a lot of small business lenders and financing companies that also check personal credit. It could be because your business is young or not making a lot of money. Some financing companies will do a soft credit check on personal credit just to make sure there's no red flags, like a bankruptcy, for example. So you also want to work on personal credit. The good thing is you can work on both at the same time. Even if you have bad personal credit, you can still work on building business credit. So what types of accounts help you build business credit? It's pretty similar to building personal credit in that you get accounts with companies that let you pay later or pay over time. That can include things like supplier credit, where your vendors or your suppliers let you buy things that you need for your business and pay for them later. Often those will be on net 10 or net 15 or net 30 terms. And if that company reports your payments, that can help build your business credit. Other types of accounts that can help you build business credit include business credit cards. Most business credit and charge card issuers do report to at least one of the major business credit bureaus. Business loans and lines of credit, equipment leasing, and commercial business loans. One of the questions that often comes up at this point is, how long will this take me? Building business credit is a process, and you do want to engage in this process because you can't just set it and forget it. You need to get a few accounts that you use and pay on time in order to build a payment history. And that payment history, in turn, helps you build strong business credit scores. Every business is different, so it's impossible to say if you do exactly this is how quickly you'll build business credit. But a rough time frame is you get a couple of accounts to start, 2 or 3, and then those accounts will typically show up on your business credit in somewhere from 1 to 3 billing cycles. So it may take a couple of months before they appear on your business credit reports. Then you pay them on time over a period of several months, and at that point, around the 6-month mark, you should be making some progress. If you went, for example, from no credit score, you should now have a business credit score with the credit reporting agencies where those accounts show up. And then as you continue to use credit over time, you should see your business credit build. I have seen some business owners make a lot of progress in the first year of building business credit, but they typically are using those credit accounts, checking their credit, monitoring their credit, and adding new accounts when it's necessary. So now let's talk about monitoring and accessing your business credit reports, and then I'm going to give you some quick action steps. So for monitoring your business credit, you can go directly to the business credit bureaus. Remember, I said there's no free business credit reports under federal law at this point. So you can go directly to the bureaus. In most cases, you'll have to buy reports, and they can be expensive sometimes. Or you can go to a service like NAV, and NAV will offer you a free summary report from all the major business credit bureaus. as well as the option for NAV Prime. And for a small fee, you can see detailed credit reports from multiple business credit reporting agencies, and you can actually get up to 2 trade lines with NAV. And then the beauty of this is that you'll be able to check and monitor your business credit. So each month you can check in and see, am I making progress? What's happening with my credit score? What else could I do? Do I see mistakes that I need to dispute with the credit bureaus? Those are all important steps to making sure your business credit is as strong as possible. Let's go through a couple of steps you can take right away. First of all, check your credit. No matter how you do it, you need to know what's on your business credit reports. Number 2, be realistic about the time frame and understand that this is a two-way process. You do have to be involved in the credit building process. It doesn't have to take a lot of time, but it is an investment in your business's future. And then number 3, look for some quick wins. Some quick wins are some easy trade lines that you can use for things you're going to buy anyway and build that payment history that helps you build business credit. And finally, separate your business and personal credit. Personal credit and business credit are both important for business owners, especially in the early years of your business, but you don't want to mingle the two. You want them to stand on their own. The stronger each one is, the more opportunities your business will have. We've got a bunch of resources in the description, so check those out and comment. Tell us what you're doing to build your business credit. Share, like, and subscribe for more business building tips.